Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about automated option strategies, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
Can you do a mechanical strategy in a complex options trade? I guess that's the big question. I've been asked this several times in my Discord, and I'd like people to think about what it actually means to do a mechanical strategy. Well, essentially what you're saying is, can we automate a strategy? Can we come up with all of the criteria, the situations, the execution, the type of execution? Can we do all of that and do better than somebody who is trading that same strategy by hand or in a discretionary manner? Let me just say, first of all, that I've been creating automated strategies for a couple of decades, maybe a little bit more, and was a quantitative and used many of those strategies in my hedge fund. Literally created thousands of strategies, very sophisticated strategies that were completely automated. The machine just took over. We were constantly updating and trying to improve on this strategy, trying to find the sweet spot. And really the problem with any singular strategy is that it is almost impossible to find the quote sweet spot because conditions are always changing, and the condition that you created the strategy for may be fleeting, may be very well contained, and it might work for a particular time, but not in another type of environment. That's really the problem. Some people will argue that, well, you can just backtest for all the different strategies and market types and then detect the market type and then switch your strategy or alter it to be conducive to that particular market type. It sounds so easy, doesn't it? It is a very difficult thing. One thing that I did find out, I can say definitively that there is no one single strategy that you could automate that will work all the time. That simply doesn't work. There are types of strategies or clusters of strategies that you can put together with a certain philosophy that can work over time. But again, I guess the real argument is that the most optimal way to do a strategy. So for instance, what I have found, what does work is multiple uncorrelated strategies working together and having a loose degree of correlation, and perhaps even doing some form of a statistical arbitrage across those correlated strategies may have some promise. But even that is really an approximation. And you're putting on a strategy like that in order to take the discretionary part or the subjectivity of humans and all of their frailties off of the table. Now, that could be good or it could be bad. One thing that I have seen in brokerages, and in most brokerages, they'll have two camps of in-house traders. They have the automated group or systematic group, and then they'll have the discretionary traders. And if you were to look across all the different brokerages that have these two different groups, and I've seen studies on this, although mostly what I'm going to tell you right now is conjecture and what I have seen for my own two eyes, and also studies that I have seen that may be not complete, is that the discretionary groups tend to do better than the systematic groups. And so that's kind of interesting. So we're getting now to our profit management framework here in Zero DTE, and some members are wondering, can I automate some of this? Can I take the discretionary part, the subjectivity part off the table, and thereby eliminate the frailties that us humans have? I mean, there is no other reason why you would do it, right? You wouldn't do it because you felt like maybe a computer could make better decisions than you, or that the strategy that you come up with is more intelligent than you. I don't think that would be the case. You would do it because maybe you're just not good enough at trying to decide how deeply to hold a strategy as it's going into profitability, and when to get out, when to take the loss, how to let your winners run and get out when losers are overbearing, etc., making those optimal decisions. And that's notable, except that everybody has tried it. I've tried it. I've known hundreds of traders that have been successful in certain extent. One of the only real automated strategies that work in my realm or my experience are front-running arbitrage strategies, the type that might be used in high-frequency trading, simply because it is extracting a pure arbitrage in a way that a human couldn't possibly do it. The other types of strategies are what I'd also described as these sort of loose-bounded hedge fund strategies that, for the most part, work when they work, and of course, there's always at some point where they'll stop working, but take on a kind of statistical arbitrage across a number of highly correlated assets. Then there's the other type that I had mentioned earlier, where you look at very uncorrelated assets that all have some degree of positive expectancy. Not that they're all perfect. They may win sometime and lose sometime, but if you put enough of these together and you can control their correlations so that they're diametrically opposed with one another, and you can create a basket of these strategies. In general, my experience is that those types of systems are potentially very profitable because they tend to knock off the losing side with winners, and of course winners with losers, but if they all have some degree of positive expectancy, then the average amongst all of them will actually produce a pretty good result. But is it optimal? Is it practical? I mean, if you're going to compare that to what a human person can do with their discretion as opposed to creating something that is more convenience so that you don't have to have humans involved. And when you do something like that, it requires a fair amount of computing power and know-how to first fashion the strategy and then come up with the right combination of correlation, etc. So it's not an easy thing to do. But that's really outside the bounds of what we're really talking about. What we're really talking about now is if you have a discretionary strategy that might have some rules around it, can you look at those rules and then codify it and then turn it into some automated thing that will completely supplant you and be able to produce a better result? I'm not aware of any strategy like that, and I've been trading for quite a long time, and I'm sure that there are people out there with their own bots, and they'll tell you how great their bot is and how much money it makes. Great, just show me the money, all right? Show me how it works. I'm not aware of it. All right, I'm going to put that aside and just say that a mechanical strategy is kind of a fallacy. Everyone's chasing after it. Everyone is claiming to have bots. Anybody that has one that actually works, why they're selling it to other people would be beyond me.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.